been another nervy day on the markets. Oil ticked up again after more airstrikes against Colonel Gaddafi's forces in Libya. And while the news on Japan's nuclear-stricken power plants has been less negative, World Bank estimates put the cost of the earthquake and tsunami at up to $245 billion. Here's Emily Stewart.
Potential flashpoints across North Africa and the Middle East are still keeping oil markets on edge, with an ever-present threat to production and supply of crude. And after Western forces launched military strikes to disable Libya's air defences over the weekend, today the price of Brent oil jumped $2 to top $116 a barrel.
You don't need much of a change in world oil production from any producer to have an impact on prices.
Libya only produces 2% of the world's oil, but Dr Boutin says today's jump in oil price was also muted because the major Libya-related spike has already happened.
There was a big hiccup in prices when the instability in the Middle East first arose a couple of weeks ago. Really oil prices since then have hovered around the $100 for WTI, or about $115 for Brent.
He warns any further uprising in the Middle East could trigger a domino effect.
The market is now quite tight because of the stronger fundamentals and the fact that some suppliers come off from Libya. So I think any upset in the supply chain could certainly lead to a spike. I think one of the consequences of that would be that would be quite damaging for the world economy.
Worldwide events in Libya and Japan are also having an effect on currency markets. Last week, the Japanese yen reached record highs against the US dollar. And in an attempt to curb the soaring currency, the G7 group of leading Western economies agreed on coordinated intervention.
Today, along with others, we decided to conduct a joint intervention in the foreign exchange market. Extreme fluctuation in currency rates is not good for the stability of financial markets and also the economy. We will watch the currency markets carefully, and we have confirmed that we will cooperate.
And saw some success.
The dollar-yen spiked quite significantly, over 100 or around 150 pips, within the 2 hours shortly after the intervention.
The efforts to calm the market gave traders an improved risk appetite, and today that's helped the Australian dollar get back above parity with the American greenback.
Now that we're seeing a bit of a resumption, the Nikkei coming back a little bit, the ASX coming back, that has correlated to a strength in the Australian dollar. So right now it looks like Australian dollar is a reflection of people feeling comfortable coming back into risky assets.
Dan Perry says it's likely there'll be further intervention by the G7.
It remains to be determined, how effective second and third interventions might be. It seems like they got their bang for the buck the first time around.
And as markets try to come to grips with the cost of the earthquake, tsunami and nuclear threat, the World Bank says the negative impact on Japan's growth will be short-lived. It says growth will be stunted for the first half of the year, but GDP will pick up as reconstruction efforts accelerate.